So this is 2009 paper 1 question 8. Okay, so this one, Connie has managed the partnership of Aldo and Bashir for many years. She earns an annual salary of 36,000. Okay, what does this question really ask? So here says, prepare the following: the partnership capital accounts for the year ended 31 October 2009. B, a profit and loss appropriation account for the year ended 31 October 2009. Okay, it says prepare a profit and loss appropriation account. It did not say a profit and loss and appropriation account. So that means the question wants you to prepare only the appropriation part of the profit and loss account. That means from the net profit onwards. Okay, and then part C, prepare a partnership current account, and part D, balance sheet. So that means it appears that you have to prepare the full set of everything. So part A, partnership capital accounts. Okay, so let us look here first. So the year end is 31 October 2009. Okay, so it says here, Connie managed the partnership of Aldo and Bashir for many years. She earned annual salary of 36,000. Aldo and Bashir share profit of 3:2. On 1 July 2009, Connie was admitted into the partnership. The new partnership agreements provides the profit and loss to be shared is Aldo, Bashir, and Connie. Okay, this one is the trial balance of the new partnership at 31 October 2009. The trial balance as at, that means this is the new partnership as at 31 October. The trial balance of the new partnership as at 31 October 2009. Okay, then now you may assume gross profit and operating expenses are spread evenly throughout the financial year. Additional information not included in the trial balance are book value of certain asset would be adjusted on 1 July 2009. Okay, so then what is the story? Okay, in short, you have to prepare all the accounts as at 31 for the full year as at 31 October 2009. So that means you have to prepare all the accounts from 1 November 2008 to 31 October 2009. Okay, you see, from 1 November 2008 to 31 October 2009, okay, but in between, something happened. In between, on 1 July 2009, that means in between that period, Connie was admitted into the partnership. Okay, so then now that means there's two different stories. From the beginning of the year, that means from 1 November 2008 until 30th June 2009, the business owner consists of Aldo and Bashir. Okay, then from 1 July 2009, Connie joined the partnership. So that means from 1 July 2009 until the end of the year, which is 31 October 2009, the business now consists of 3 partners, Aldo, Bashir, and Connie. So that means at the end of the year, which is as at 31 October 2009, there are 3 partners. So they said prepare a partner's capital account for the year ended 31 October 2009. So why don't you do step by step? Prepare the structure first. So this is the partners as apostrophe is a plural capital accounts for the year ended 31 October 2009. So draw the structure like this. There are 3 partners, Aldo, Bashir, Connie. Okay, you should put here $sign, and then this one is Aldo, Bashir, Connie. So put $sign, $signs. And then part B of the question says profit and loss appropriation account. That means profit and loss, the sharing account. The appropriation means the sharing, the distribution account for the year ended 31 October 2009. Okay, there are 2 periods in question. So in these 2 periods, there is so-called quite a different story. So like what I said, from 1 October 2008 to 30 June 2009, the two partners in the company is Aldo and Bashir. So put it 2 columns. So you draw the 2 columns first. And then from 1 July 2009, Connie joined the partnership until the end of the year, which is 31 October 2009. Sorry, here you should put $sign underline. Okay, I forgot. So this is 8 months and this is 4 months. And then you should put a total column here, $sign. Okay, because there's 2 different stories. So you lay out these columns first. And then part C says prepare a partnership current account for the year ended 31 October 2009. So you should do the structure first. You can use the whole page. Okay, partners current account for the year ended 31 October 2009. Aldo, Bashir, Connie, $sign. And then this is also Aldo, Bashir, Connie. Okay, so draw the structure. Okay, and part D says, okay, this one balance sheet, like what I explained before, do in a statement format. Okay, Aldo, Bashir, and Connie. Okay, balance sheet as at 31 October 2009. Okay, lay it out the fixed asset, then in the middle of the page put current asset, then the next page capital account, then leave some space, current account, then current liabilities. Okay, so this is partners equity. So now you have lay out all your structure. So when you have laid out all the structure, I will fill in the easy number first. Okay, so now have your question paper with you. Okay, so now we have the question paper here. We have gross profit, and then we have all these capital accounts, current accounts. Okay, capital accounts, current accounts. Then here you have goodwill, then depreciation, and all these things. Okay, so then now we have the we have the partners capital account. Okay, you should have your question paper in front of you, so it will make it easier. So from the trial balance, okay, so capital account is a credit nature, so the balance brought down should be on the credit side. So from the trial balance, okay, so this one is for the year ended 31 October 2009. So year beginning will be 1st November 2008. So at the beginning of the year, which means the 1st November 2008, Aldo capital is 100,000 because it's stated in the trial balance. It's given there that capital is 100,000. Okay, so that is given in the question, and then Bashir is 90,000. So on 1st November 2008, Connie was not in the partnership yet, so is 0. Okay, so the you see in the question it says here that Connie paid 25,000 as her share of capital. This has been included in this trial balance. So the beginning of the year, Connie has not contributed, but during the year she contributed 25,000. So she pays. So that means if she paid, that means she have paid into the company bank account. Okay, the partnership bank account. So it would be credited to Connie's capital account. Then the other account will be bank, because it would have correspondingly debited to the partnership bank account. So that means it would have debited to bank and credited to this capital account. So 25,000 is credited into this capital account, and the corresponding debit will be in the bank account. Okay, so this is how I get this number. And then okay, so now look here. Goodwill was valued at 75,000. So additional information not included in the trial balance. Goodwill was valued at 75,000, but was not recorded in a separate account. So in the previous in the first video of this part, I have explained to you. In that question, it says that goodwill is not to be recorded in the balance sheet. So sometimes the wording can be a bit more tricky. Goodwill was to be valued at 75,000, but was not to be recorded in a separate account. So that means, in other words, they are so-called trying to say that the goodwill account, would not appear. That means the goodwill account would not appear in the balance sheet. So that means goodwill will not be recorded as an account in the balance sheet. So that this is what it means. So that means the goodwill will be credited to the old partners capital account. So in the old profit sharing ratio. So the old profit sharing ratio, according to the question, is Aldo 3 and Basel 2. So that means Aldo is 3/5 and Basel is 2/5. So if you take 75,000 times 3/5, you get 45,000. So that will be Aldo's goodwill. And then 75,000 times 2/5, that will be 30,000. So it will be credited to the old partners capital account in the old profit sharing ratio. And goodwill will be debited to all the new partners, the ongoing partners capital account in the new profit sharing ratio. The new profit sharing ratio as given in the question is Aldo, Basel and Connie 3:1. So if you apply the new profit sharing ratio, it takes 75,000 times 3/6, you get 3,750. And then 75,000 times 2/6 is 25, and 75,000 times 1/6, you get 12,500. Okay. So what else would be in the capital account? Okay, what else will be in the capital account? Okay, now you see additional information here. Book value of certain assets would be adjusted on 1 July 2009. Okay, you see, on 1 July 2009, Connie joined the partnership. So that means they are treating, when the person joined the partnership, all the asset and liability, it would be fair to bring it to the current fair value, so that any increase in the asset or decrease in the asset would be credited to the old partners capital account. Okay, yeah, of course it will be fair, because the thing is, you see, the premises as stated in the old balance sheet is at the old value, but okay, when the new partner come in, they put in the effort to get the valuers to value the premises or whatever asset at the current fair value. So you see, when the premises increase so much, as at 1 July 2009, the new partners was not existing until this date. So any increase minus the decrease in the assets would be due to the old partners, to be fair, because the old partners was in the business up to this date, right? So any increase in property valuation, of course, minus any decrease, that means any net increase in property valuation should be given to the old partners, because the old partners were the one who were in the partnership up to 1 July 2009. So any net increase in the any net increase in the appreciation of the assets should be due to the old partners. Okay, the old partners, because they were the one who were in the business up to this date. Okay, so that means any increase are the assets of the old partners. Okay, yeah, because they were the one who are in the business. So 80,000, this is an increase, premises increase, 80,000 minus the decrease. So the net increase of the asset would be 72,000. Okay, so that's why this is the 72,000. The 72,000 should be credited to the old partners in the old profit sharing ratio. So I call this revaluation. Okay, revaluation account. 43,200 and 28,200. Okay, so this one Connie won't be given anything for the net increase in the assets. So then now how you close the account, you see which side bigger. So all the numbers, you see, it's definitely the credit side are bigger. So I add up all these numbers. Then I put the same number over this side. Then this one minus this one, the difference will be the balance carried down as at 31 October 2009. So the balance brought down will be on the credit side. So all these balances will transfer to the balance sheet, okay, to the balance sheet. So that means this 100, 150, 700, 123, 800, 112, 500 will go to the balance sheet here, okay. Yeah, all this figure is from the capital account, just now. Yeah, so it will go to the balance sheet. Okay, so I explained the capital account already. Then now similarly, you can try the current account first, because this would be not so difficult. So you see, in the trial balance, the current account, although is a credit balance of 17,800, and then Basel is a debit balance, so the balance brought down for Basel will be on the debit side. Okay, because the trial balance says Basel's current account is a debit balance. Okay, drawings is also given in the trial balance, so I just copy the figure only. Okay. Okay, then now, okay, so this is this is all I can gather. Then part B. Okay, so you see, the thing is, before we do the appropriation, we need to do some adjustment first, because there are two story over here. So the first part is in these 8 months, it was only Aldo and Basel. Then 1st July, it was Aldo, Basel, and Connie. So the gross profit, as stated in the trial balance, is 422,000. So 422,000, if you prorate, this one 8 months, so that means the ratio is 2:1. So if you prorate, so that means 420,000, 2:1, right? Times 2/3 will be 280. 420,000 times 1/3 will be 140. So if you prorate into the different periods, the gross profit is like this. Okay, then you see, in the part 3 of this question, additional information not included in the trial balance. Okay, not included in trial balance. Depreciation is charged at the end of the year as follows: equipment to be depreciated at 33900, and then premises is 5% per annum. You see, the question says here, you may assume gross profit and operating expenses. The operating expenses means all operating expenses, including depreciation, are spread evenly throughout the financial year. Okay, so that means I'm assuming depreciation is also an operating expenses, is also spread evenly throughout the years. And depreciation is not included in this trial balance. Okay, so here you have operating expenses, including of Connie's salary. Okay, so depreciation, it says that premises is 5% per annum. Okay, so then what is the value of premises? What is the value of premises? Okay, the question says that premises. Okay, you see additional information number 3. It says depreciation is to be charged at the end of the year as follows: premises 5% per annum. Okay, in the trial balance, the premises at net book value on 1 November 2008 is 220,000. And then note 1 says premises to be increased by 80,000. So 220,000 plus 80,000 will be 300,000. Okay. So at the end of the year, you will charge depreciation for the premises. The book value of the premises will be 300,000 at the end of the year, because it's 220,000 plus the premises increased by 80,000. So 220 plus 80 will be 300,000 times 5%. The total is 15,000. So you prorate this 15,000 to 8 months and 4 months. This means this is 2:1. It will be 10,000 and 5,000. Okay, so you prorate. Then equipment, the depreciation is 33900. So in the same ratio, if you prorate, will be this and this. Okay, so the questions in the trial balance, operating expenses inclusive of Connie's salary is including Connie's salary is 144,000. Okay, why don't I exclude Connie's salary first? So if I exclude Connie's salary, so operating expenses excluding of Connie's salary is 108,000. So if you prorate it, will be 72,000 and 36,000. Okay, so so this is the gross profit, right? So gross profit, so that means the operating expenses excluding of Connie's salary is 72,000 and 36,000. So the gross profit I should minus Connie's salary. You see, in these 8 months up to 30 June 2009, before Connie joined the partnership, she was earning an annual salary. You see, in the beginning of the question, she was earning an annual salary of 36,000. So you see, that means she was earning an annual salary as a staff, as an employee, not as a partner, okay, of 36,000 a year annual salary. So that means 1 month salary is 3,000. 1 month salary as an employee is 3,000. Then on 1 July 2009, Connie was admitted to the partnership. And when she was admitted, Connie's previous salary of 36,000 per annum to cease, and she would be credited with a partnership salary of 24,000 per annum. So that means from 1 July 2009, her partnership salary is 24,000 per annum, means 2,000 per month. Okay, her partner's salary is 2,000 per month. She doesn't get the employee salary already of 36,000. Okay, so that means this operating expenses, we exclude the Connie salary first. So that means this is operating expenses excluding the Connie salary. So this is gross profit, right? So that means from the gross profit we will minus the Connie's salary, Connie's employee salary. So Connie's employee salary is 36,000 per annum. That means 3,000 per month. Okay, 3,000 per month, 3,000. So 8 months will be 24,000. So 3,000 per month, right? Times 8 months is 24,000. So Connie's employee salary will be 24,000. So from here, gross profit minus all this, I will get the net profit. So here also I minus. Here I don't minus the employee salary because she will be given a partner salary. Partner salary will be dealt in the appropriation account, not in the upper part, which is I'm adjusting the profit over here. I'm adjusting the figures so as to arrive my net profit in this line. So this is the net profit for the first 8 months and the 4 months, and this is the total net profit. So this is my profit and loss appropriation account for the year ended 31 October 2009. That means the upper part, this is my so-called workings. Then here is my appropriation account. Okay, so then here I less partner salary. So for the first 8 months, she was an employee, so no partner salary. So for the 4 months, the partner salary will be at 2,000 per month. 2,000 per month, and then 4 months will be 2,000 times 4 over 12. Okay. 24,000 per annum times 4 months over 12 months will be 8,000. This is less partner salary. Okay. Is it that okay? You see the question, what the question says. Okay. So here says profit and loss. So there's only partner salary. So the question didn't say that there is interest on drawings or interest on capital. So since the question didn't say that there is interest on capital, so we assume that there's no interest on capital. Okay, so only partner salary. Okay, so then this will come to profit available for appropriation, or net profit available for appropriation, for sharing. So for the first 8 months up to 30 June 2009. Okay, Aldo and Bashir will be sharing profit at a ratio of 3:2. Okay, so that means this one I times 3 over 5, I get this figure. This one I times 2 over 5, I get this figure. And from 1st July until 31st October 2009, after Connie joined the partnership, the profit will be 321 as given in the question. Okay, so this 79,000 will be appropriated in this ratio. Okay, so then when I add this way, when I add horizontally, okay, I get the total share of profit this way. Okay, because in the first 8 months it was a different story from the fourth month, the subsequent 4 months, four months of the year. So I have appropriated the profit based on 8 months and 4 months, and this will be the share of profit for all the 3 partners. Okay, so I have finished part A and part B of the question. So the share of profit is, this one will go to the current account. Okay, will be credited to the current account like this. And then the partner salary, 8,000, will be credited to the Connie's current account, like this. Okay. So in the trial balance, okay, okay, so then there is because if the question is not clear, so you can clarify the question with some notes or assumption that you want to tell the examiner. Okay, so this is what I want to clarify. Assume depreciation is distributed evenly throughout the years, as stated in the question that operating expenses are spread evenly. So actually I don't need to write, but I just want to make it clearer, so I put a note here. Okay, so you see the question, because when the question is not clear, I would like to clarify. So here says operating expenses, bracket, including of Connie's salary. So they are saying that this 144,000 is including the Connie's annual salary of 36,000. That is what I assume, right? Because that is what is given here, which I a bit which some of it is an assumption on my part. Okay, so that's why I'm assuming that it is assumed that Connie was paid a salary of 36,000 as the operating expenses include Connie's salary. So it is stated in the question in the trial balance that operating expenses including Connie's salary. So I'm telling the examiner, because the question is not clear, so I'm telling the examiner that I'm assuming that the 144,000 includes Connie's salary as a staff of 36,000. Okay, as it is stated in the question that the operating expenses includes Connie's salary. So as the answer in B, Connie's annual salary is supposed to be 24,000. Okay, so that means Connie's but you see the Connie's salary as a staff is supposed to be only 24,000. So that means 12,000, because you see you have already credited her partnership salary is 8,000. So that means we have we should take back from her the 12,000. So that means this is an adjustment that I'm trying to say. So this one is previous salary. So that means here is the salary. Okay, so that means what I'm saying is, you see, we have given her the partner salary of 8,000. So we are assuming 36,000 was paid to Connie as an employee salary in full, 36,000. Okay, and now we are already crediting her with 8,000. So you use your calculator. So that means this 8,000 is already credited to her, to Connie as a partner salary. That means, in other words, given to Connie as a partnership salary. Okay, her employee salary is supposed to be only 24,000, but we assume that we have paid her 36,000 as an employee salary. So that means we have overpaid Connie. We have overpaid Connie by 36,000 minus 24,000, which is 12,000. So since we have overpaid her, we would take back from Connie. So this is an assumption note that I've put here, that it is assumed that we have so-called paid Connie 36,000 as an employee salary, because the question is not clear, so I'm clarifying here in my notes. Okay, so we should deduct back from Connie 12,000 because we have overpaid her. Okay, since we have put in all the figures, then we will close the account. So you use your calculator and then you write in pencil to see which side bigger. Okay, so although it's obvious it's this side bigger, so we calculate, we add, put a number, then put the same number here. This one minus this one will be, the difference will be the balance carried down. So this one also is this side bigger, put this number, then put the same number here. This one minus this two, this will be a balance carried down. This one is this side bigger, so this one, put the same number here. This one minus this two, this will be the balance carried down. So the balance brought down, this one, Connie, will be a debit balance, and this two will be a credit balance. So the balance will put in the balance sheet. So this two is a credit balance, and that will be a debit balance. So the current account balance will transfer to the balance sheet this way. So then we underline, then we get the partner's equity balance. So then now we come to fixed asset. Fixed asset, you see, how I get 300,000 is in the trial balance in the question, the promises is 220,000. Then note 1, it says promises increased by 80,000. Plus 80 will be 300,000. Then minus 15,000. 15,000 is the depreciation for promises. So promises that's why 300 minus 15 will be 285. Equipment, according to the trial balance, equipment is 132. Okay. Minus 8,000, because note 1 says equipment reduced by 8,000. Then minus the depreciation, so this will be the net book value of the equipment at the end at 31 October 2009. So fixed asset bracket net book value. So this is the figure. So current asset stock, this is from the question. Debtors 59,000 is also from the question. Okay, so that's how I get a figure. So bank overdraft is also from the question. You see, in the trial balance in the question, bank is on the credit side of the trial balance, 11,200. Okay, you see in the question here, this is debit and this is credit. So bank is a credit balance of 11,200. So that means it's a liability. So I put it here. Okay, so then that's how I got all the figures. Okay, so I will make one question, one video. So in the next video, I show you this 2008 9372 paper 2 question 4. Okay, thanks for watching.